Hello everyone, welcome to the API for the Future session of World FinTech Festival 2021 from Japan. We are having wonderful panelists with various backgrounds, and it's exciting to talk about this API related topics. And starting from comparing the API ecosystem situation in different parts of Asia, we would like to discuss how open banking would change financial services and what is required to speed up the reform. So before going into the discussion, I would like to have our panelists introduce themselves. So I would like to start from Mr. Pieter Franken. Please introduce yourself briefly.
Thank you very much, Shibata-san. My name is Pieter Franken. I'm based here in Tokyo. I've been working in the financial industry for over 30 plus years, doing various types of digital transformations and innovation in the regulated space. Today, I'm here to talk about AFIN and the APIX platform.
Thank you, Pieter. So I would like to turn to Mr. Taejun Shin. So Taejun, please introduce yourself.
Hi, everyone. This is Taejun. I'm the founder and the CEO of Gojo and the company. We started a company to create the private sector version of the World Bank, providing financial services for everyone, especially in developing nations. Now we are working in 5 countries and we serve 1 million customers or 1 million households. For most of them, we are the only financial service provider, and the impact we believe is much huge. And we are the fastest growing microfinance group in the world record, and we hope to work more countries in the future. Thank you.
Thank you, Taejun. And now I'd like to turn to Mr. Dirk van Quaquebeke.
Thank you.
I'm not sure whether I can pronounce your name correctly. Dirk, please.
Thank you. Yeah, briefly about myself, Dirk van Quaquebeke. I'm a managing partner at a venture firm we started 6 years ago here in Singapore. We invest early stage into technology companies in the region being composed of India, Southeast Asia, and Japan. And a good 30% plus is actually FinTech or FinTech associated products, and we work very closely with the companies to bring them regionally, globally, or cross-pollinate across our portfolio, and there API and open banking is a big topic.
Thank you, Dirk. And now I'd like to turn to Mr. Mark Makdad. Please, Mark.
Thank you, Shibata-san. My name is Mark Makdad. I've been a resident of Japan since 2005. And in 2012, I started a company called Moneytree in Japan, focusing on financial data aggregation. And we offer a financial data aggregation platform that other companies can build on top of. In 2018, when the Japan banking law changed, I was a member of the FinTech Association of Japan board, focusing on APIs and security, and I'm now a board member of the Japan Association for Financial APIs. Now that we have open banking regulation enacted in the market, I am working both as an individual in my own company, connecting to and working with banks on their APIs, as well as at the regulatory and trade association level to help Japan's open API infrastructure become stronger into the future. I look forward to speaking with you all today.
Thank you, Mark. And for myself, moderating today, I'm Makoto Shibata from FINOLAB. And FINOLAB is a FinTech hub where we support 50 startups, and also we have 20 corporate members trying to pursue their open innovation initiatives. And prior to working at FINOLAB, I have been working in banking world, more than 20 years in digital banking world. So I'm quite excited to have different initiatives going on in this API world now. So we would like to start from asking each panelist how they are involved in API or open banking initiatives. So maybe I would like to start from Pieter.
Thank you. I'm going to share a few materials quickly to explain what APIX is about. So I'm going to switch to that now, and let me know if that is visible. Shibata-san, you can see the slides?
Yes.
Okay, thank you. So very quickly, what is APIX about? First of all, it is worthwhile to talk a little bit about some of the challenges that we're seeing within Asia and other developing areas. We see that there is specific larger banks, larger fintechs that are providing technologies that are digital, and they're serving customers digital. And so typically these customers are more wealthier, more established, or corporate customers. And we see a lot of the digital technology is being used there. We also see that there is a good usage of APIs. However, if we look at banks that are working in second-tier banks or rural banks or MFIs, in many cases these banks or financial institutions are serving their customers not digitally but through branches. And if we go further down the pyramid, so to speak, there are still a lot of people, for example, in Asia, it's estimated around 1 billion people that are increasingly digitally enabled but are not being served by a financial institution. And so this is kind of a huge challenge that has been, talked about for at least 10 years plus, in terms of how can we start to digitally transform these spaces, how can we financially include more people, or we include people more happily by using digital technologies. But there's been a lot of challenges along the way. And some of those challenges have a lot to do with, not with the technology, so to speak. A lot of the technology has been there. APIs have been out there for quite some while. But the adoption of this technology has been very, very slow by financial institutions. And so about 4 years ago, a few groups came together and created a organization to find a solution for this problem. And APIX at that time was founded by the Monetary Authority of Singapore, the IFC World Bank, and the ASEAN Banker Association. Currently, as you can see on this slide, there's many other organizations that have partnered with us to focus on this specific problem of digitization of smaller institutions. And one of the problems, or one of the bigger problems, is that when you look at fintechs that try to bring solutions into the market and bring these to financial institutions, is that they spend a lot of time to actually get engagement. It is not an exception for a fintech to spend between 1 year and 2 years to actually sell a solution. So this adoption is really going very, very slow. There's all kind of reasons for this to be slow, and with APIX we are trying to solve that problem by offering a set of solutions. All these solutions run on the APIX platform, and of course are digitally and cloud-based, and offer in multiple ways to help financial institutions to speed up their digital journey. A few highlights out of that. First of all, APIX offers a marketplace of now over 1,000 fintechs, global fintechs and regional fintechs that solve all kind of problems, like, for example, KYC or credit approvals or things like that. You can find those fintechs on the APIX platform. You can find their APIs, and their APIs are real time. You can immediately try out and play with them. That is then connected to what we call a sandbox, an online development environment where you can actually start to build prototypes and start to figure out how you actually want to solve your digital problems. That also allows you to very quickly get used to the fintechs and solve some of the issues and concerns around the capabilities of those fintechs. Another capability that we have on the platform is around ready-to-use digital solutions that helps a bank to actually build an entire solution, not just a part of a solution. And we also have technology which we call the Twin that allows you to bridge between legacy environments and the current world of APIs. With these tools and some other things that we have, it allows a financial institution to kind of jump over a number of hurdles and very quickly get into doing things rather than talking about the things. It also addresses a number of regulatory concerns around the speed of innovation. One thing that we are adding currently as part of the Singapore FinTech Festival is the capability to to validate data around fintechs. A lot of banks have found it difficult to get a good sense of what a fintech is about, what is their history, what is track record, and we're offering capabilities to validate data about fintech so that banks have to spend less time to do that. But also we're starting a program for fintechs to collect verifiable credentials. These are kind of tokens that you can collect along the way that a fintech can give to a potential customer and kind of captures the past experience of that fintech. And this also will help banks a lot because they don't have to go and do all the checkpoints again, and should speed up the time it takes for procurement to happen. But still, as of today, is maybe 30 to 40% of the time spent between a fintech and a bank. To close quickly the introduction of APIX, currently we have close to 100 financial institutions on the platform. The numbers here are a little bit outdated, sorry for that. We have over 1,000 fintechs on the platform. We have well over 1,000 endpoints in terms of APIs. We have done various deployments in the field where we have helped smaller banks to go digital, larger banks collaborations. But we also run what we call digital hackathons, where we bring fintechs and banks and institutions together to solve a problem together in the open space. And we're running many of these hackathons as we speak today. And it is a great way to kind of stimulate the tremendous amount of innovation that is possible with fintechs. I'm going to leave it here and back to you, Shibata-san.
Thank you, Peter. It's great to know that APIX is making a great progress. And now I'd like to turn to Taejun. Looks like Gojo is doing a lot of interesting things in financial inclusion. If you could explain a little bit about how you are expanding your initiatives and also how API comes into the picture.
So in Pieter's framework, we are directly serving the base of the pyramid segments. So first of all, let me very briefly explain what is the situation of financial inclusion in developing nations. So roughly 4 billion people live in developing nations. And according to the World Bank, in 2017, 40% of them don't have bank accounts. And 60% of the people have bank accounts, especially in India. The government pushed very hard to provide bank accounts for everyone. However, among these 60% of the people who have bank accounts, most of them are not satisfied with the service quality, usability, or the price. So we call it financial exclusion. It includes not just those without bank accounts, but also those who are not satisfied with the usability or the price of the service. And that is the target segment that we are tackling. And the number is said to be around 3 billion people, roughly 1 billion households. So the one more important thing about this, the base of the pyramid people, is that just the 30% of the people have smartphones, and 30% of them are illiterate. Although the number of smartphone owners is increasing very rapidly, I think it still takes time. And we always have to take that fact into account in developing our service. So especially when it comes to API or open banking, one of the obstacles that financially excluded segment is facing is that financial service providers don't have structured data of these users. So with the structured data, you can much more improve the cost efficiency of the services, and eventually these low-income segments will be able to enjoy better and cheaper services. And why the data is not structured? The reason is basically twofold. One, banks and the traditional financial institutions still have legacy systems, some of them. And the second reason is that the data of the clients are quite fragmented or siloed. And the API ecosystem or open banking might change this situation. And one great example is India. So as some of you might know, India circulated the Aadhaar card, which is ID card for everyone. And India has the world's best payment infrastructure, which is called UPI. And thanks to which, for example, in our case, we transformed our microfinance 95% cashless. No other microfinance institutions are doing this. They are still the 20 to 30% cashless ratio only. But in our case, thanks to our engineers and the vendors' efforts, we improved the cashless ratio considerably. And also, thanks to the data sets using algorithm, we managed to modernize and improve our loan assessment process using algorithm considerably. Also, I think the one thing that we can foresee in the future is the collaboration with the other service providers. And again, through API, we can enrich the data by which we conduct the assessment of our service. And now we are in discussion with payment companies as well as life insurance companies, such that we can improve the service quality for our clients. So I stop here. Thank you.
Thank you, Taejun. And now I would like to ask Dirk about the same question. What initiatives you are involved in? What kind of investment scope that you're talking about in the API context?
Sure, thank you, Shibata-san. So as mentioned in the introduction, like we invest largely early, and we invest in India, Southeast Asia, Japan. And if we look sort of at the history of fintech, I would probably broadly describe it as it started with payment and payment infrastructure, and we're still not done on that front in many of the markets we're actively investing in. And to an extent, API first models and open banking or credit card issuing stacks or whatever are falling in the payment infrastructure in many ways, or fintech infrastructure bucket. But like sequentially, it was really payment gateways, then lending, then sort of wealth and FX. And then people realized, well, or founders realized we don't want like just one point of contact, and we want a more holistic way to financial inclusion. There should be a bank account, not only a lending product, especially in the underserved segment. There should be a way to compound your wealth. So we saw a whole host of neobanks coming in, and then sort of like, to use some buzzwords, embedded fintech. And I think that's where open banking and a lot of the infrastructure 2.0 plays broke loose, and Plate falls in that category, but like Bankable and other international examples, Solaris Bank, etc., pp. But now we're going to what many talk about is invisible finance or invisible fintech, right? And how is that different from like embedded fintech? It's maybe even more native with the use case, right? And in early examples, we're actually seeing in crypto where your income is associated with a financial use case. So we're looking at trends, and then we're backing along those trend cycles. I think we have, over the last 6 years, invested in over 220 companies. So in each of these trends, I think we have picked up some thematic, either very thematically early leaders, thought leaders, and or leaders in terms of traction. In India, I think, or maybe like some portfolio companies worth mentioning and double clicking on this open banking theme, right? When we hypothesized about it early on, we thought, and we started backing it maybe 5-6 years ago, we said, well, money is like water. If there's too much at the wrong time, it's not good. If there's too little, if there's non-accessibility, flowers cannot grow, right? And plants cannot grow, an orgasm cannot grow. So it's really about like, how do you engineer water to come to the right point at the right time and the right doses? And I think that's where open banking API and the right form factor as well plays a huge role. We have invested in maybe like both in Southeast Asia. They're working with APIX, with Pieter Franken over at APIX, Brankas, which is a leader in Southeast Asia in open banking API services coming from the technology provider subset. So they would work with banks who sit in these isolated silos. They help them create essentially a data layer and a communication layer between maybe the core banking has no incentive to changing because they would lose their business. So there are also all sorts of interesting dynamics of legacy players that have no incentive to change, which makes the bank stuck, right? And I think there's a lot of interesting software players that are playing into that misalignment. You can see the same even in the card networks and sort of card network bank and then incumbent dynamics, and you have like interesting, and I would classify them in the open banking API category. Why? Because they're ultimately making fintech embeddable, but the form factor is a credit card. So modern credit card issuing stacks in the US, it would be a Marqeta. In our part of the world, it would be an M2P fintech out of India, which is a clear leader. And then we have even neobanks, which are trying to basically become a competitor or novel offering to the status quo, i.e. a branchless bank with superior unit economics, if you will, leveraging a bunch of these innovations that have happened over time and bringing that into a concentrated offering to the consumers. But in a portfolio company called Open Money, what they're doing is they're even allowing, let's say, service customers to design their own financial use cases for their specific need. So you might see let's say a trucking marketplace that has a payout use case, and they design that within the realm of an SME neobank called Open Bank. Why? Because they have an exposed open API. They can create accounts. They can create positive or negative balance credit cards. So they can basically design fintech and embed it into their dynamic use cases while consolidating it in the back into their core business processes. So you have an automation of accounting and interfacing with the regulators all out of one hand, right? So I think there's a lot of innovation happening. Maybe the main point is really look at it as software, or we look at it as if it's just software. And when you design good software, what you want is composability, compatibility, and portability. So you're looking to unleash ultimately bigger collaboration. If you have building blocks and Lego blocks, you unleash more and open innovation and collaboration. Obviously also competition, but also a lot of new use cases that previously were just not feasible from a unit economics or from a design spectrum point of view. And that leads ultimately to faster compounding, faster change, more speed, more innovation. And I think that's what open banking is all about.
Right. Thank you, Dirk. I guess it's quite interesting to see that its API is not just about the technology, but also there's a certain power game going on. And maybe, Mark, you can explain about some of the power game in Japan or other situation related to APIs.
Sure. Thank you, Shibata-san. So most of the information I'll be presenting now is about what is going on in Japan, but I think it's also interesting to contrast the Japanese open banking regime with other open banking regimes. And as it's early days in many regulatory regimes, to see what are the impacts on the market of various pieces of legislation and heavy or light regulations, so on and so forth. So first, let me start by giving a brief background of the situation in Japan. The Japan Banking Law, Banking Act, was amended in 2018. A new classification of company was created called the Digital Payments, etc. Agency. And very loosely, for those familiar with PSD2, there are Type 1 and Type 2, or AISP and PISP type subclassifications within that. There was a period of 2 years where existing fintechs who may have been doing screen scraping or using other technologies had a statutory obligation to sign a contract with each bank they were connected to. So as of September 2020, in Japan, a fintech or any other company that wants to access account holder data or initiate payments on behalf of an account holder needs to have a contract with the bank that they are interacting with. So we're about 3 years into the regulation now, and in addition to a contract, you also need to have yearly monitoring with each bank. So I'd like to start there by saying it's kind of an interesting comparison to other markets. Japan does not have a what I would call a registry model. So it's not like you sign up with the government and they do all the security checking and then you're just magically connected to everybody. For example, Australia has taken this sort of approach. In Japan, you still do need to get contracts with each individual banks, and they will ask you questions about security and monitoring. So where this is interesting is we are seeing some market-driven solutions of how can we automate or all work together to reduce the burden of ongoing monitoring. For example, accepting third-party certificates such as ISO 27001, so on and so forth. So in some senses, I would say I've seen a lot of positive market-based movements in Japan because of a very light regulation, and basically the regulator saying to the fintechs and to the banks, well, you guys need to have a contract, but other than that, please work it out yourselves. There are some problems, though, on the other side, which is that the issues of access level and cost are not addressed by the Japanese regulation. So, for example, we talk about APIs as a panacea solution technically. Oh, if you have APIs, everything's going to be fine. But the discussion about legacy systems came out. And usually, as Pieter said as well, behind those APIs is usually a legacy system somewhere. And so if I hit an API 100 times a day, I'm going to have a bank calling me saying, stop that, or please don't do that so much. Now, for certain use cases, maybe 100 times a day is reasonable. For some use cases, it's not reasonable at all. So it's very difficult for the government, especially in a very light piece of regulation, to try to predict what use cases are good and what use cases are bad. So the discussion in Japan right now that we are starting to have a few years into the regulation is to say, what is a fair amount of access and what's a fair amount of cost to charge for that? So unlike other jurisdictions in Japan, there's no mandatory open data. So a bank can charge a connection fee for accessing their API. Personally, I see that as a large barrier to entry to innovation in the market. And I've made my thoughts clear here and to the regulator and to just about everybody else. But on the flip side, I can really see the bank's, pain point as well. Because if the banks have to open up APIs to companies that are going to access them all 100 times a day, the infrastructure costs for the banks are going to be very, very high. And I do see an opportunity here for new players. It was mentioned as well a number of times already, new fintechs coming in and providing better infrastructure and newer infrastructure to these banking players to help them kind of get through this. But I guess Japan being a purely market-based solution, some of these things are happening faster, some of these things are taking time. I do believe that the regulator watching over the situation and kind of course correcting from going from a non-open banking regime to an open banking world is definitely necessary, because there are opportunities to encourage innovation, but there are obviously opportunities, as we said earlier, for legacy players to block out or kind of keep things as the status quo. I think many companies, everyone involved, needs time to update and go through their business models and find how they're going to serve customers in the new way of things. And I think that open data in a more general sense, who does data belong to, is a good way to drive that discussion. And so just one comment earlier, when we were talking about, Dirk was talking about money being like water. I would just like to add, it's not just the money, it's also the information about money. In fact, we always say data is the new oil, and it's a very, very oversaid concept. But it's not just the money, because the banks are very good at handling money. What they have traditionally been very weak at is information about money and handling that. So with that, I'd like to stop here. Thank you very much, Shibata-san.
Right. Thank you, Mark. And maybe I would continue to ask you, you mentioned about the legacy system and also market-driven initiatives are in Japan. And do you see any other major obstacle to block this API ecosystem to expand?
I think at the moment, probably in Japan, the lack of a registry and the lack of a clear cost structure make it difficult for new fintechs to participate in the open banking regime. Many of the fintech currently participating were doing screen scraping or account aggregation before. The cases we are seeing of new registrants tend to be a particular fintech wanting to launch a certain service with a specific bank, but kind of broad market, all bank access type use cases, we are not seeing so many new ones.
Right, thank you, Mark. And then Dirk, can I ask, what do you see as an obstacle looking at your portfolio company, how they can expand their API ecosystem or pursue open banking initiatives?
Yeah, so I think what the team at APIX, and it's heavily supported by MAS, is doing, right, is a great step in the right direction, because it can be a bit of a maze, right? So this discovery and search process on both sides of the table, i.e. the early stage startups as well as the large incumbent banks, and bringing some sort of stamp of approval into the equation, I think helps bridge this gap slightly. It's not something that's very native to startups, to be honest, and it's harder. But if you have worked with large institutions and understand that the cost, again, it goes back to simple alignment. So many CIOs don't have an incentive to make a bet on an early stage startup, right? That's just the reality. So it's safer from an employment point of view to just stick with IBM. And no, I mean, everybody knows the saying, nobody ever got fired for choosing IBM, right? So and you can obviously apply that to Salesforce and other sort of tangential areas, like more novel players. But the point being is there's something missing there in translating the innovation to actually being utilized and ramped up at a higher pace, that it fits sort of how enterprise is moving and thinking, right? So there, I think it's interesting to see initiatives like APIX, but also that I think consulting firms are starting to react to that and building out practices, digital transformation practices that are bringing these startups forward, and basically becoming flower salesmen, right? Like, what do you need? Here are 500 startups. We have enough innovation to go around. I think that's great. I think capital is certainly not a constraint. I think incumbents have to watch out that they're not getting left out. And we have seen that in China, where essentially startups become each other's customers and scale so fast that they don't even go to the legacy players anymore. So there will be new regulation driving full stack licensing around neobanks that are just much more adept and much more faster and in the right mindset to make quick decision, experimental bets, A/B test new technology, and are a lot more prepared throughout the organization. So I think that's a real, I don't want to say risk, because like everybody always feels threatened, but I think it's more an opportunity to lean in and be more experimental and more forward. And then as an overall category, crypto has it all. Composability, has no regulation, but it has a lot of the good stuff that you think about when you design software systems, right? And a lot of the embedded fintech is there by default. So those are some of the areas that I'm thinking about, and where I'm spending time with regulators or large incumbents or banks that want to drive change and invite us or other members of the team to their board to drive this kind of change or help them understand. So it's like this understanding, stamp of approval, making it searchable, accessible for people to navigate, and making it okay to fail, make wrong decisions, experiments.
Right. Thank you, Dirk. And maybe Pieter, if you can tell us what kind of obstacle you faced, since APIX is a group effort and covering a different jurisdiction?
Yeah, so I think Mark and Dirk already highlighted a number of challenges that there are around bringing innovation into a regulated space, because that's really what it is all about. And I think those are definitely part of the puzzle. I just wanted to highlight one kind of from the viewpoint of a small bank. We recently worked with a small bank in the Philippines that came onto APIX about a year ago, and they wanted to go digital for a longer period of time and had actually trying to do that for 3 years. But it really required APIX to accelerate their journey. And one of the number of reasons were there. One was had to deal with just simply not knowing what to go with, who to, which fintech to choose or which supplier to choose. Just not having, how do you trust and where do you go, or just to look for them. Also, fintech's not really interested to come down in an area where the buildings are not tall and things are not shiny. But there's also challenges around regulators not being ready for that. In this case of the bank, Kantilan Bank in the Philippines, rural banks and large banks are regulated by two different departments in the regulatory office. So it is also challenging if you're regulating rural banks that are primarily brick and mortar. Once one of those banks decides to go digital, then it changes kind of a lot of questions. Wait a minute, is that bank ready to do this? They're capable of doing over-the-counter transactions, but suddenly they're doing digital stuff. And how did they make all these technology decisions? How they, are these the right decisions and stuff? So APIX was developed to do that. But all of these things are really becoming incremental hurdles to do so. And there is a myriad of things. I think Taejun was also talking about. There's infrastructure issues or illiteracy issues as well to deal with. So if you want to use it, but I think from the API angle, it isn't that there are, as Dirk said, there's thousands of fintechs. There is a lot of technology that can be done, but sometimes the CAO decision is not to leave the legacy. Is definitely there for incumbents. Larger organizations deal with that pool. But for small organizations, you would expect it to be an easier decision. But there's other things that are decked against you to innovate. So I think those are some of the challenges that we see, and I'm curious to hear also from Taejun what kind of his challenges are in that space. But it should have been much easier. Otherwise, we created APIX for this reason. Otherwise, there wouldn't have been need to do so.
Great, thank you, Pieter. And maybe I would like to turn to Taejun. And I think you've already mentioned in your initial remarks that in the financial inclusion context, you've come across different types of obstacles. But can you elaborate more on what kind of obstacles you face in API expansion?
So yeah, there are many challenges. So three categories: customer side, and provider side, and the regulator side. So customer side, as I already mentioned, many still don't have smartphones, and literacy level or digital literacy level is still very low. And literacy is the biggest challenge because it takes time to change. That's number one. And number two is provider. So first of all, in microfinance segment, many microfinance have been like NGOs. So they quite often were not able to afford the quality engineers, and also sometimes culturally it's very difficult to hire these talented people. But that's from our side, it was easier. It was an easy challenge to overcome. We have great engineers team. One more difficulty actually is, as Mark mentioned, is our partner side, which is the banks and the other financial service providers. So when we implemented the cashless transaction in India, the biggest challenge is bank side, because we connect with their system using API for payment. Quite often the biggest the most frequent errors was that the bank side server was not responding, or there was some other technical glitches. So it took much more time for us to solve our partner's issue, not our issue. And third is regulator. For example, in Myanmar, until very recently, there was no even interbank system in the country. So you can imagine how this API integration will be difficult. So these are the challenges that we are facing. And to overcome this client-side challenge, actually, our cashless transaction in India is done by fingerprints, not by any card or smartphone. It's leveraging the Aadhaar card system. So Aadhaar card has fingerprints information. So our customers, when they come to our meeting, if they have put fingerprints, then we can make the payments as if we use contactless card in rich countries. So that's one leapfrog that we achieved. And yeah, thanks to the great infrastructure in India, we are pretty sure that we can overcome many challenges. But in the other outside of India, where infrastructure is not ready, I think we will have to think about the other way around, and we are still struggling.
Thank you, Taejun. And unfortunately, our time is limited, and I prepared more questions, but I would like to jump on to your final comment on the future of API. Maybe if you could briefly comment on how you see the future of API ecosystem. Maybe Dirk, can you start?
Yeah, let me be provocative. Like be fast, or I think really crypto is gonna steal the lunch.
Thank you, Dirk. That was somewhat provocative. And maybe Pieter, what's your thought?
Thank you, Shibata-san. I like to stay in the same style as Dirk's, and I would like to say that no API, no financial service ecosystem. I think the future will be full with open APIs and means to easily connect to each other and build financial services that will be inclusive for everybody.
Thank you, Pieter. And Taejun, what's your thought?
Technology and innovation make us overcome this dichotomy or the trade-off between doing good or making money. And we are working very hard, and API ecosystem and open banking is one of them for us to achieve the further innovation such that we can provide more useful and affordable financial services. And we will keep working. Thank you.
Right. Thank you, Taejun. And Mark, how about your thought?
I think I am somewhere in the middle. So I think that on access to information side of open banking, I think that as regulated entities, banks have a social and moral responsibility to make access to their information cheap or free to their customers via open APIs. And I would encourage regulators to explore those discussions with those people who want to access open banking APIs, if the regulatory environment doesn't already encourage it. However, on the payment side of APIs, I would like to kind of give a nod to Dirk, which is to quote Bill Gates, which is to say, the world doesn't need banks, it needs banking. So if the banks fail to innovate on the payment side with APIs, I wouldn't be surprised if other people come in, at which point those new people that come in, they will need to provide access to information. So I really do encourage people to split payments and access to information into two buckets, although they're both accomplished by APIs.
Right. Thank you, Mark. And I guess we had a very fruitful discussion, and too bad that the time is limited. But I hope to continue this discussion, and we would see the world changing with API. Thank you so much, and thank you for listening all these discussions.
Thank you.